Well, Sydney rents just keep climbing. The average house is around $850 a week, units $760. Weekly rents have climbed up $43 in the past year. Unfortunately, the outlook is grim with just so much demand.
Sydney rent just crossed $800 weekly. Cotality data shows median dwelling rent hit $817 per week in December 2025. That's $3,540 per month. Houses $855 weekly, units $758. And here's the number that should terrify every renter. Vacancy rate fell to 1.7% nationally, Sydney below 2%, balanced market needs 3%. Domain's Dr. Nicola Powell confirms, it is a landlord's market in Sydney. Rental listings dropped 11% year on year, sitting 17% below 5-year averages. Some suburbs hit extremes, Vaucluse, $2,310 weekly. That's $120,120 annually. CBD 1-bedroom apartments, $850 weekly. 3-bedroom, $1,800. While Premier Chris Minns announces 377,000 homes by 2029, actual renters queuing in lines of 120 people, offering above asking rent, paying months in advance. Workers earning full-time salaries still can't afford basic housing. And annual rent growth, 5.2%. Nearly 1.5 times inflation rate. Sydney, officially most expensive rental market in Australia. Minns watches Sydney become unaffordable. Cotality's quarterly rental review reveals Australian rents rose 5.2% during 2025, nearly 1.5 times inflation rate of 3.4%. National median rent pushed to $681 weekly, but Sydney far exceeds national average. Sydney median dwelling rent hit $817 weekly. Most expensive capital in Australia, houses $855, units $758. Rent growth accelerated toward end of 2025. December quarter saw 1.3% rise, up from 0.9% previous quarter. Momentum building, not slowing. Tim Lawless, Cotality's research director, calls findings bad news for both renters and inflation. Ongoing growth in rental costs, bad news for renters, with Cotality's National Rental Index surging 42.9% over past 5 years. 42.9% in 5 years. That's 8.6% annually compounded. Wages grew roughly 3 to 4% annually, same period. Rent rising 2 to 3 times faster than incomes. Gap widening. Crisis intensifying. Vacancy rate tells real story. National vacancy fell to 1.7%. Pre-COVID decade average was 3.3%. Sydney below 2%. Some inner suburbs like Darlinghurst below 1%. Domain's Dr. Nicola Powell explained, tight vacancy rate below 2 to 3%, which is more balanced market. What this showcasing is supply and demand imbalance across Sydney's rental market. Supply shortage severe. Rental listings dropped 11% year on year, sitting 17% below 5-year averages. Not temporary dip, structural shortage, population growing, housing construction collapsing. Simple math, more people, fewer rentals, prices explode. The nurse paying $3,400 monthly for 1 bedroom. Emma is 28, registered nurse at Royal North Shore Hospital, earns $78,000 annually. After tax, roughly $60,000. That's $5,000 monthly. Renting 1-bedroom apartment in Crow's Nest, close to hospital. 10-minute walk. Listed at $750 weekly when she applied 18 months ago. Inspection had 45 people. Emma submitted application immediately. Professional references, pay slips, rental history, bank statements, offered $780 weekly, $30 above asking. Agent called 2 days later. Property rented to couple offering $820 weekly, $70 above asking. Emma missed out. Emma kept searching, attended 12 inspections over 6 weeks. Every property oversubscribed, 40 to 80 people queuing. Finally found 1 bedroom in North Sydney, $785 weekly. Older building, no parking, no dishwasher, tiny bathroom, but available. Emma applied, offered $800 weekly, $15 above asking, got it. Emma now paying $800 weekly, that's $3,467 monthly. On $5,000 take-home income, that's 69.3%. Reserve Bank stress threshold is 30%. Emma at 69.3%. Severe rental stress, no savings, no emergency fund, living paycheck to paycheck. One unexpected expense away from disaster. Emma's landlord just issued 90-day notice of rent increase. New rent $850 weekly. That's $3,683 monthly. Would be 73.7% of income. Emma can't afford it. Gave notice. Now searching again. Attended inspection last week. CBD 1 bedroom. $850 weekly. Same price landlord wants. Inspection had 85 people. Agent conducting group viewings. 15 people at once. Rotating through. Emma didn't even apply. Knew she'd lose. Emma considering leaving Sydney entirely. Looking at Newcastle, Wollongong, Canberra, anywhere cheaper. But then abandons career at Royal North Shore. 5 years building relationships, expertise, reputation, starting over. Because Sydney rent exceeded nurse's salary. That's Premier Minns' housing success story. 5 reasons Sydney rents exploded. Reason 1. Supply shortage, structural and worsening. Rental listings 17% below 5-year averages. Construction industry collapsed. 3,217 builders failed 2024. New dwelling approvals down. Projects unviable. Supply pipeline broken. Meanwhile, population growing. Over 650,000 new residents expected by 2034. All needing housing. Most initially rent. Supply falling. Demand rising. Rents explode. Reason 2. Investor exodus reduced rental stock. Tighter rental laws favoring tenants, increased compliance costs, reduced returns, many investors selling, removing properties from rental pool. Every investment property sold is rental lost. Domain data shows investor sentiment negative. Property Council confirms landlord exodus. Each exit reduces supply, tightens market, pushes rents higher. Reason 3. Vacancy at crisis levels. National 1.7%, Sydney below 2%. Balanced market needs 3 to 3.5%. Current rate means for every 100 rentals, less than 2 available. Competition catastrophic. Landlords choose best tenants, highest incomes, strongest references, most stable employment. Everyone else rejected. Reason 4. Home ownership unattainable forcing permanent renting. Sydney median house price $1.75 million, 13.8 times median household income. Second most unaffordable globally. Young families can't buy. Forced to rent indefinitely, creates permanent renter class. Demand stays high. Nobody graduating from renting to owning. Bottleneck. Reason 5. Government policies stimulating demand without adding supply. First home buyer scheme allows 5% deposits on properties up to $1.5 million. Sounds helpful? Actually inflames crisis. More buyers competing for same limited stock. Drives prices higher, makes homes less affordable, doesn't create single new dwelling, stimulates demand side, ignores supply side. Classic policy failure. What Minns can't fix, and what he can. Minns can't control population growth. Federal immigration policy. State has limited influence. Can't prevent interstate migration. Sydney jobs attract workers. Demand largely fixed. Minns can't reverse investor sentiment quickly. Damage done. Trust broken. Takes years to rebuild. Can't fix overnight. What Minns can do. Fast-track density around transport corridors. Trains, light rail, buses, zone for high-density residential. Cut approval times from 18 months to 6 months. Remove NIMBY objections. Build where infrastructure exists. Maximize existing investment. Release Crown land immediately. Government owns vast holdings. Release for development. Mandate 30% affordable housing. Mix market rate and below market units. Provide supply. Addresses affordability. Simultaneously, build social housing at massive scale. 20,000 units annually across NSW. Takes 100,000 people out of private rental market over 5 years. Reduces demand pressure. Stabilizes prices. Protects vulnerable renters. Incentivize build to rent through tax breaks. Institutional investors building purpose rental stock. Long-term tenancies. Professional management. Stable supply. Tax concessions make projects viable. Planning bonuses for BTR developments. Reform strata laws enabling office to residential conversions. Empty commercial buildings across Sydney. Convert to apartments. Streamline approval process. Reduce conversion costs. Use existing built environment. Increases supply without greenfield development. Pause or reverse anti-investor policies. Every additional regulation reduces investor appetite. Every compliance cost makes returns worse. Need investors providing 90+% of rental housing? Stop attacking them. Create partnership. Shared goals. But Minns doing some. Slowly. Planning reforms announced. Implementation lagging. Land releases promised, not delivered. Social housing targets set. Funding insufficient. Meanwhile, Emma the nurse can't afford rent despite earning $78,000 annually. That's system failure, where this explosion ends. Best case, construction accelerates dramatically. 50,000 to 60,000 dwellings annually. NSW, higher than current 40,000. Vacancy improves to 2.5%. Rent growth moderates to 3 to 4% annually. Matches inflation. Emma finds affordable apartment. Stays in Sydney. Continues nursing career. Worst case, construction stays constrained. Builder collapses continue. Maybe 35,000 to 40,000 dwellings annually. Well below demand. Vacancy drops to 1%. Rent surge another 10 to 15%. Sydney median hits $950 weekly. $4,117 monthly. Emma forced to leave. Newcastle or Wollongong. Abandons Royal North Shore position. Sydney loses essential worker. Healthcare suffers. Realistic scenario. Current trajectory continues through 2027. 40,000 to 45,000 dwellings annually, barely keeping pace with population. Vacancy stays 1.5 to 2%. Competition fierce. Rent growth 6 to 8% annually. Above inflation. Above wages. Sydney median hits $900 weekly by 2028. Emma struggles. Maybe finds share housing, 30 years old, professional nurse, living with roommates. Because market broken. CBRE forecasts median apartment rents grow 24% between 2025 and 2030. That's roughly 4.5% annually compounded. Sydney currently $758 weekly for units. By 2030, $940 weekly, $4,073 monthly, $48,880 annually. On median household income, $134,000. That's 36.5%. Severe rental stress. Entire generation locked in. The PANICS won't admit. Sydney median rent hit $817 weekly. December 2025. Most expensive capital in Australia. Houses $855. Units $758. That's $3,708 monthly for house. $3,285 for unit. Vacancy fell to 1.7% nationally. Sydney below 2%. Balanced market needs 3%. Rental listings 17% below 5-year averages. Annual rent growth 5.2%. Nearly 1.5 times inflation. 42.9% over 5 years. Wages grew maybe 15% same period. Rent rising 3 times faster than incomes. Gap widening catastrophically. Emma, nurse at Royal North Shore, earning $78,000 annually, paying $800 weekly. That's 69.3% of income. Reserve Bank stress threshold 30%. Landlord increasing to $850 would be 73.7%. Emma can't afford. Giving notice. Attending inspections with 85 people. Losing every application. Considering leaving Sydney. Abandoning career. Because nurse's salary can't cover rent. Vaucluse $2,310 weekly. That's $120,120 annually. CBD 1 bedroom $850 weekly. 3 bedroom $1,800. Cotality forecasts continued growth. CBRE projects 24% increase by 2030. Sydney median units hitting $940 weekly. Population growing 650,000 by 2034. Construction industry collapsed. 3,217 builders failed 2024. This is how Premier Chris Minns' housing crisis became Sydney's rental explosion. When median rent hits $817 weekly and vacancy at 1.7%. Marketing crisis. When nurses earning $78,000 can't afford 1-bedroom apartments, system has failed. When 85 people compete for single unit and rent rising 5.2% while wages grow 3%. Math impossible. And when government announces 377,000 homes while construction industry collapsing, targets a fantasy. Rents will keep rising, more workers will leave Sydney, more essential services will suffer. Hit subscribe to see when Sydney rent hits $1,000 weekly.